On June the 23, 2016, the British people voted to leave the European Union, sending shockwaves around the world. The UK's financial sector mostly campaigned to stay in Europe, and now there are fears for the industry's future. But is everything really so gloomy? In this Viewpoint series, we look at both the challenges and the opportunities created by Brexit. We started by talking to Ed Thurman, Managing Director of Financial Institutions for Lloyds Bank, about the major concerns of the bank's clients. So Ed, we had the referendum and the result was a bit of a shock, but we've had a bit of a chance now to get used to the idea. What sort of impact is it having on the financial services sector in the UK?
I mean, it's very interesting. I think from a Lloyds point of view, we're obviously the largest commercial and retail bank in the UK, so we're very close to businesses of all shapes and sizes, and they've all been affected by this in various different ways. I think that the common theme that we've seen play out over the course of the months since the referendum vote has just been the introduction of uncertainty into the operating environment. That's quite an obvious thing to say, but it's creating a real premium on companies' ability, and this is financial services companies, or indeed more broadly, to manage those risks in a proactive way. And they're having to consider a far broader spectrum of risks, be that around not just currencies, but also thinking about interest rates, the interest rate environment over the short to medium term. It is a more complex web of risk they're having to navigate in a way in which they've not really had to over the previous years.
But what about the FX situation, for example? I mean, in some ways, a drop in 20%, that's positive news if you're an exporter, isn't it?
And again, what's interesting about the situation right now is there are opportunities as well as some of the risks that we talked about just a second ago. And so really, it's the ability of companies to respond to that changing operating environment, to hedge themselves where appropriate, and then to take, if you like, considered risk on the upside as well. And that's really the balance which you see businesses of all shapes and sizes trying to strike, and which we're frankly here to help with.
Now, the downside of a fall in the exchange rate like that is inflation. I mean, how concerned are your clients about inflation going ahead?
I think they are. I think there is and more generally, looking forward into the economy, the sort of importing of inflation through the kind of devaluation that we've seen is going to be a factor for some businesses. But again, it's how you think through, what is the prudent financial management that you want to apply in those circumstances, either to your input costs or into your own pricing strategies as well. So all of those factors are at play. And again, it's something that we're quite thoughtful around working with our clients in terms of, how do we give clients information around some of the moving parts of the equation, if you like.
All right. Now, you said that the financial sector is a broad church, lots of different kinds of players in there. So, I mean, for some of those actors, presumably there are opportunities, perhaps in the asset management space.
I think that's definitely the case. I think, again, we serve a whole range of subsectors within the financial services space, and there are those that are looking at this as an opportunity to expand, to grow their share in the UK. There are others that are questioning exactly what the balance of their operations should be in the UK. So you've got a real mix of things going on. I think one of the things that's quite encouraging for us is, the UK is still, and London is a sizable scaled financial services marketplace. It's an international marketplace. And really it's for institutions and businesses of all sizes to understand, how that's going to change, and then how they need to continue to engage with London and banks like Lloyds to help make them successul. Okay,
so we've got a lot of businesses in this uncertain situation. There's some upside, there's some downside, but how does Lloyds Bank actually help steer people through this situation?
Well, this is where I think banks really come into their own, and I think, particularly we think a lot around the consistency of the support that we provide to all of our financial services clients. So, one of the things which we've been very clear on is the referendum vote means no change in strategy, no change in risk appetite, and that's been true over a number of years. It's a very consistent framework that we operate to, and there's going to be no change in that. But also I think it's incumbent upon us, particularly with some of the smaller financial services businesses, helping them interpret a lot of the changes that we're seeing going on right now. And again, we have no understanding or guarantee around what the outcome would be, but what we can do is start to decode some of these processes, some of the moving parts, some of the things that people hear about in the press, in a very fact-based, very objective way, just to raise the sort of, if you like, the awareness and the knowledge base around, some of the moving parts in this.
And what about businesses that are actually doing a lot of business in the European Union itself? I mean, they must be the most concerned of the lot.
Well, I think there's again, you can read the press around, what is the nature of the settlement that we're going to finally get to with the EU? What does that mean for a cross-border business? again, we can be really clear around, what the component parts of that, what the sort of, if you like, on the scale of what can be done within the negotiating space. But there's a lot that's still moving around there. I think, again, for us as a bank, we support our clients' business in Europe. We also support big businesses in Europe that have sizable operations in the UK. We will continue to do that. It's not a question of a change in strategy or a change in risk appetite.
Okay, Ed Thurman, thank you very much.
Thank you.